Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us at the MarketSite studio, we have Chris Dearborn, Managing Director on Nasdaq's Market Intelligence Desk, for a review on technical levels to watch in the Nasdaq 100. We're also going to talk about the reversal of fortune in all the indexes today, as well as the strength or the strain on the consumer. Chris, definitely a different story that we're telling them this morning, and the reversal I thought was interesting. Let's talk about that quickly, and then I also want to get your thoughts on the consumer, since we've had a number of consumer and retail reports come out this week.
So the indexes started out strong. Remember, you had GDP come out this morning a little bit weaker than expected, right? The second revision was at 2.7 versus 2.9 for the initial, and that boded well into the Fed's mantra that maybe rates might be a little bit more put off. The terminal rate might not be as long as high. But then the unemployment number came out at the exact same time, both at 8:30. And the unemployment number for this morning, initial claims and continuing claims, overlapped the non-farm payroll number that we saw at the beginning of the month, confirming that that high number, we had 560 some odd thousand jobs created in January, wasn't a fluke. It wasn't seasonality. 193,000 new claims came in, 92,000. I mean, that's just ridiculously low for where we are right now. So that kind of made traders think, like, I'm not sure what to make of this. Futures were up in the morning, markets opened higher, and then we sold off over the course. They were rallying back into the close. So kind of it's interesting. It might be a trader's market, because at the end of the day, we're still trading relatively to where we closed on Tuesday. Remember, Monday was the holiday. You know, the market sold off strongly following the strong PPI print last week. And then yesterday with the Fed minute release, a lot of the conversation was about how long will the terminal rate be up. And nothing really in there was surprising. So the data has been very strong. Not as strong as feared, but not as weak as hoped. Therefore, giving market sentiment, I'm not sure.
Right.
And that's the problem that we have right now.
It sounds like what all the strategists are talking about. It could be this, could be that.
Don't know.
Nobody knows. Before we get into your charts, though, I want let's talk about the consumer for a bit here, because that has been part of the bullish side of the tape, the strength of the consumer. Is the strength still there, or do you think they're starting to get strained? You
know, there's a couple of interesting things, right? So on the GDP print today, they talked about personal savings rate. It came in a little bit higher than expected at what was it, 3.9% versus the advanced estimate of 3.4. It means people are putting a little bit more money away. But on the flip side of that, you look at retail sales, you know, they came in very strong in January too. So where are people spending? Then you look at the credit card data. People are putting items on credit cards. That's never a good item. That's always a precursor, one of the forward signs of a precursor for a recession, right? People load up on the credit card debt. Then they try to find ways to pay it off. If they don't, they just pay that balance, and the banks are going to make a boatload of money because of the higher interest rates right now. You're paying 25, 30% on some cards right now, whereas 2 years ago you're paying 15 to 18%. So if you're spending right now, you know, what are you spending on? People are buying cars. The price of cars have come down, right? That was one of the big items that came in there. Remember, used cars 6 months ago were going for ridiculous amounts of money, you know, and now that's starting to come in. So people have put that sale off. Maybe they got their Christmas bonus. Maybe they just wait a little bit longer, wait the price to come a bit more normal. That's working out. You know, the basic basket for CPI is still high. Eggs are extremely expensive. But again, is that inflationary, or is that really because of the avian flu, right? So it's kind of a mixed bag. When you look at it, consumer strength is weakening. And a weakening consumer is going to be bad for future earnings. And that is going to be bad for stocks in the space down the road. So looking back to what happened in Q4, pardon me, the Christmas buying season wasn't as strong as a lot of people think. The NRF forecast a huge gap. It was still within the parameters for the year, but below what they were hoping for the Black Friday, Christmas. Even now we go back into, you know, late October for the sales and everything.
Yeah, it's like, you know, 12 weeks instead of 6 weeks at this point. Let's pull up your first chart here. Let's get a fresh take on technical levels to watch, even though the index at this point is nearly up 1% relative to where it was this morning.
So it's interesting, the index opened near the highs of the day. It'd be nice to recapture that. That would be a nice bullish technical after 2 days of consolidation. That's 12,224. You know, we're right around 12,100, a little bit higher right now. The index has claimed and held all the moving averages over the last few weeks, which is very constructive and supportive to a bullish technical. The problem here is, when is it going to start to abate? RSI is coming in at about a 48 handle, which means it's starting to wane from buying to selling. Again, still in that neutral phase. 30 is oversold, 70 is overbought. So there's room to run in either direction right there. You know, ideally, the problem here is that we broke the 38.2 Fibonacci retracement level on Tuesday on a closing basis. That was a major technical support level that fell through, and that's now the new resistance point. The support is at the 200-day moving average, which sits at 11,905, and the 38.2 Fib, which sits at 12,283. This 12,135 level is kind of interesting because you can go either way, but if we recapture the open this morning at 12,224, it's a buy signal.
And your final chart here, what names are leading the way?
Yeah, breadth was weak, and it's gotten better. It was 40-60 when I put the chart up originally. Now it's about 50-50. It's all about the chips, NVIDIA.
Yep.
Strong, and everybody else behind them is following suit. You know, they're adding almost 15%, about 90 points to the market. ANSS is just having a strong day on earnings as well. On the flip side, Lucid, Moderna, eBay, all weak on earnings as well. So what's happening is the larger boys who have a bigger weighting are kind of moving back and forth. They're starting to swing to the upside. Amazon, Apple, Alphabet, all moving a little bit higher now where they were lower earlier today. So that's where interesting fact, you know, out of the different sectors in the Nasdaq 100, obviously the most weighted sector is tech. What's the second most weighted sector?
I would say consumer.
Consumer discretionary, 16 members. Amazon, Airbnb, Starbucks, Lulu, a whole bunch of companies, and of which we have 2 reporting earnings tomorrow, Booking and Mercado Libre. So we'll see where that takes us.
It's a good thing I said consumer, not financials, right?
Absolutely.
Right. Chris, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.